give us your assessment on what you see in the fundamentals, because Chinese stocks continue to have a pretty good run. Do you think there's additional upside?
Sure. I think that you continue to be constructive both on the Chinese economy and on the markets. I still think that there's still a meaningful upside from current levels for a couple of reasons. Number one, Chinese policymakers have demonstrated their ability to quickly contain the new waves of COVID infections without hampering the economy. And in fact, the country experienced 0 new locally transmitted cases nationwide yesterday. And so this means that the economy can continue its recuperation somewhat uninterrupted. And so this is reflected in the most recent July data that continues to show the Chinese economy rebounding and recovering, especially on the supply side. Now, that being said, I continue to watch Chinese consumption, which continues to be anemic. And this is measured by the retail sales continuing to be negative. But I think that there's been an impact of the recent floods and potential economic uncertainties associated with COVID. And my last point is that, Chinese stocks rallied yesterday because of the PBOC announcement of 300 billion RMB in liquidity injections to banks. And I think that's a very positive signal to the market that the PBOC continues to be watching the economic rebound closely, and that they stand ready to help propel the economy forward.
Yes, indeed. It does seem that continues to be the main support in the markets globally. In fact, I'm also curious about your thoughts on the rest of EM, how you play it, especially in this environment where the call continues to be for a weaker dollar going forward.
Yeah, I think that we can continue to expect U.S. dollar weakness. And just to frame that, the U.S. government added around $3 trillion to the national debt during COVID, and they have another $2 trillion more to go in the second half of this year. And so these fiscal stimulus bazookas coupled with extremely loose monetary policy means that the U.S. dollar should continue to weaken in the near term and U.S. bond yields to rise. So what that means, I think that investors should start to rotate out of U.S. dollars, out of U.S. dollar-denominated debt, into EM Asia currencies, and also local currency-denominated bonds and credit.
And what about alternatives? Because that allocation, to your mind, also holds weight right now. You're talking about allocation to gold, private equity, industrial metals.
Yes, I continue to think that it's important for investors to remain diversified, especially in the face of continued COVID economic uncertainties. And so having an allocation to alternatives should help spread the risk. And I think that, even, we've seen some outflows in gold recently. I think that this is an opportunity for investors to pick up gold at these levels.